I mean, look at this. Mr. Bachchan's family office has reportedly picked up a small stake in Swiggy. As you're probably aware, this food delivery company is looking to raise 8,000 to 10,000 crores from the capital market. And while the IPO is yet to happen, the action's already hotting up with unlisted shares that were initially sold at 350 rupees, jumping to 400 in early August and are now trading around the 470 rupee mark. So basically sub lage hue hain. And we'll also do the same as I take you through this world of unlisted or pre-IPO shares, as it's also called, as we discuss specifics like when do these shares come into the market, the different unlisted companies whose shares are currently being traded, the gray market, from where can you buy unlisted shares, how to buy these shares, what are the risks involved, the terms and conditions, what's the taxation like, and stuff like that. So chalo, let's begin. Alright, so very simply, a share in a company represents ownership in that company. So when you hear the word unlisted shares, all it means is that these shares have not yet been listed on the stock exchange. But the shares are very much there. It's just that these shares are not there with the public, but instead it's in the hands of the company's promoters, maybe some family members, employees, some strategic partner, etc. For example, I was looking through Tata Capital's FY24 annual report, especially the distribution of shareholding part. So there were a little over 13,000 shareholders in this unlisted company as of March 31st, 2024, with more than 11,000 of them having less than 1,000 shares each. But very interestingly, the bulk of the shares, 99.58%, was held by 75 shareholders, and usme bhi Tata Sons Private Limited had almost 93% of the total number of equity shares at Tata Capital. I mention this because unlisted shares that go up for trading prior to an IPO are generally from this lot, let's say this entire lot of shareholders who have anywhere from 100 to 30,000 shares, but as a collective bunch, they have just 0.3% of the company. Of course, this number will differ by company, but typically the people who offer their pre-IPO shares include ex-employees, angel investors, board members, friends and family members of the founder, etc. Now, the good news is that there are plenty of companies with unlisted shares available. And we're not talking about some chotu motu company. There are some really popular ones in this list, including Oracle Stays or Oyo, NSC, Lava, Bira, Carrier Air Conditioning, Good Luck Defense and Aerospace, Boat, SBI Mutual Funds, Farm Easy, Chennai Super Kings. In fact, how the unlisted shares of CSK came up for sale is a very interesting story. So Kotak Mahindra AMC, Kotak Mutual Fund, was an investor in India Cements Limited, and when CSK got demerged from India Cements in 2018, the AMC was allotted a bunch of CSK shares. Now, normally the demerged entity is listed on the stock exchanges in a very short period of time, but due to a variety of reasons, CSK remained unlisted for many years and is still unlisted. And for this reason, Kotak Mutual Fund decided to sell part of its holdings by inviting bids for 1 lakh shares. That being said, the unlisted shares of CSK are currently available at 175 rupees on the Precize platform, and because you can buy them for as low as 10,000 rupees, this comes to 58 shares of the company. Which reminds me, just because some of the companies I have mentioned aren't listed doesn't mean you and I can't trade in these shares. In fact, these shares are bought and sold quite frequently on the OTC market, which is otherwise called the grey market. Okay, the phrase grey market might seem to you like there is something fishy, something illegal going on. But the fact is, trading in unlisted shares is not illegal in India, and a grey market is simply a network of brokers and dealers who buy and sell unlisted shares for themselves or for their clients. Right, so I'll discuss the risks separately, but just as a headline, the grey markets where one can buy or sell pre-IPO shares, well, these are not regulated by the SEBI, the Securities and Exchange Board of India, which means there is a lack of transparency and therefore there is a higher risk to all this. But that being said, why would one want to invest in unlisted shares? Well, firstly, there's the profit motive, and because pre-IPO shares are often priced at a discount, there's a visible incentive to participate in it and make a lot of money from it once the company goes public. Additionally, the ongoing bull market and buoyant investor mood seems to have percolated down to unlisted shares as well, with the stock price of many such companies doubling in the past 6 months. The second big advantage is diversification. And I'm not just saying this like a bullet point, but many unlisted companies are actually high growth startups in promising sectors. And having some of these in your portfolio not only is a potential upside, but it might also do wonders to your investment portfolio in terms of its shape, size, and volatility. But that being said, investing in pre-IPO shares do come with its own set of risks and challenges. The first risk is, of course, capital loss. And if the unlisted company fails to perform, or if it goes bankrupt, then your entire capital can be at risk. Secondly, there is liquidity, and one might find it difficult at times to buy or sell your unlisted shares unless, of course, you're an investor through Precize, as the platform does help its investors liquidate their holdings in a 24 to 48-hour time span. Another risk is that of the IPO itself getting delayed for any reason, in which case the price of that unlisted share might see a drop in value. This happened in the case of OYO, Oracle Stays Limited, after it withdrew its draft prospectus in May of this year. But because the indications were there in February itself, one can notice the price declining from 76 in mid-February to 38 rupees by early June, which is a 50% drop in the company's share price. A fourth risk is that of dilution, and as more investors are issued shares on account of ESOPs, rights issue, preferential allotment, etc., the value and ownership of an existing shareholder does reduce. And finally, there's the fraud element, which can be in the form of scams and manipulations by brokers and promoters. Some common examples include the sale of fake or duplicate shares, inflating the stock price, misrepresenting the financials or prospects of a company, etc. Or even if there's no fraud, there is the general lack of transparency, which, at least for now, online platforms like Precize are trying to solve by offering good research, keeping the ticket size low, as well as a well laid out workflow. Alright, so there are several methods one can use to acquire shares in unlisted companies. You can invest directly in startups via angel networks, crowdfunding platforms, incubators, accelerators, etc. There is always the PMS and AIF option. ESOPs can be bought from employees or promoters. Shares can also be acquired from IPO allottees who are willing to sell them before listing. Offline brokers and dealers who operate in the OTC market are always around. And what's becoming popular by the day are online platforms that connect and facilitate transactions between the buyer and sellers of pre-IPO shares. Okay, now that I've broached this part, let's get into the actual process of buying unlisted shares. I'll be using Precize here, and the first step is to register oneself. And because all this is online, we don't need to attach any documents or courier something. So once you have registered, go to Discover Private Equity, and you'll see a bunch of unlisted companies whose shares are available for over-the-counter purchase. The platform also features a list of coming soon companies, and like I did in the case of Swiggy, you can hit the notify button for timely alerts. And in my case, I did receive a WhatsApp from Precize a couple of days later informing me that some shares of Swiggy were available. But let's go back to Spotlight, and let's say I want to explore shares of NSE, the National Stock Exchange. So I tap on it and we start getting the details. 6,049 rupees per share, a lot is 50 shares. So 6,000 multiplied by 50. Okay, this comes to a little over 3 lakh rupees. There's of course a 2% upfront transaction fee that Precize charges. Then there's stamp duty and GST. And then there's also some documentation charges. Now, because 3 lakhs was a bit over my budget, I went back to the stock list, and this time I picked up Bira 91 or B9 Beverages Limited, where a lot of 18 shares would have costed me only 10,000 rupees and change. So cheers to that. Okay, so 10,356 rupees, which seems pretty reasonable to me. But before I go on to invest in it, I'll certainly want to conduct some due diligence on my part, which is where the research compiled by the Precize team comes into the picture. Here in this document, I found relevant and solid information on the sector, the company, some market data, products, management, financials, balance sheet, P&L, cash flow, ratios, competitors, shareholders, and much, much more, including the company's annual report of the past many years. And if you have the patience to read this 247-page document, then please be my guest. Or better still, please contribute your research and help me grow my newsletter, which thanks to all of you has now crossed 30,000 subscribers. And my more recent stories around GHCL Textiles, Imagica, Sami Hotels, BLS International, and Zaggle Prepaid have not only been well appreciated, but most of them have been profitable as well. If you haven't subscribed to my newsletter yet, please do so immediately by signing up at shankarnath.com, and also tell your friends and office colleagues about it. It'll be a big help to me. Okay, back to Bira, and with the research done, I clicked on Verify Profile to Invest, which prompted me to input some additional information like my bank account details, the demat number, and my PAN. Then it was time to add funds into my account, which can be done using UPI, or one can also do a bank transfer via NEFT, RTGS, or IMPS. I went with UPI, and thanks to the QR code, this part was super easy. Then all it took was a couple of confirmations, and my buying journey was now into the processing stage with a projected 24 to 48 hour wait before these 18 Bira shares are transferred into my depository account. Now, pleasantly, this entire process took me less than 2 minutes, with the order page clearly explaining the current status and me being sufficiently informed on email as well. And now we wait.
1 day later.
Alright, so I bought those shares on a Sunday, and on Monday evening, I received this email from CDSL India at 6:30 p.m. confirming that 18 equity shares of B9 Beverages Limited are very much credited into my demat account. And that's basically how the buying process works. Now, when I was going through this buying journey, I did have some queries, some questions that needed some answering. So things like, why is my depository showing a price different from the price I paid? Or how can I view my shares in my depository account, etc. And pleasantly, Precize has this whole bunch of resources that's very useful for first-time and seasoned investors to make better sense of this pre-IPO buying journey and the maintenance of unlisted shares. Of course, once the IPO happens and these unlisted shares become listed, they can then be traded on a stock exchange, but in most cases, the investor might have to wait for a certain period of time before selling these shares, which is typically 6 months on account of a lock-in or a holding period. Another question I get often is on taxation, and with tax laws changing in every budget, I think availing the services of a tax advisor or a chartered accountant is a very wise thing to do nowadays. But I still gave it a shot, and here's what I understood. So firstly, the holding period, that is the gap between the buying date and the selling date, it remains the same, so we are still at 24 months, which basically means if an unlisted share is sold after 24 months, then long-term capital gain tax is applicable, but if it's less than 24, then it's a tax on the short-term capital gain. With regards to how much tax is applicable on STCG, this continues to be computed per the investor's slab rate, while on LTCG, the big change in the recent budget is that the long-term capital gains will now be taxed at 12.5%, which was earlier 20%, but with indexation benefits. This is touted as a big benefit for the unlisted shares industry and is expected to grow this market even further. Alright, so we've covered quite a bit in this video, and I sincerely hope I've built a bit more confidence in you as far as unlisted shares are concerned. It was an area I generally shied away from, given the earlier challenges of procuring shares offline, but thankfully the technology has kept up, and now there are online platforms that offer more price transparency and operational efficiency. That being said, I think this pre-IPO unlisted shares market is only heading upwards as more and more private companies start moving towards a public listing. So watch out for this space. I do hope you found this presentation useful. Do subscribe to my newsletter, do like this video, and I'll see you very soon. Until then.